recording classes for professional knowledge paper of credit officers or credit analyst or manager credit. So now the banks are taking directly the credit officer's post. This is also called lateral recruitment. The lateral recruitment is sometimes they may take in higher grades also. Take for example, some of the banks they are taking scale 3 or scale 4, that is a middle management grade 3, or the senior management the 4 also. So for all these things, the credit subject masterization is very much required. Some of the people at the entry level, that is called credit officers level, they may not have that much knowledge in credit. At the same time, the credit analyst or the manager credit, they may have some experience, but the basics are very much required. The strong foundation is required in the credit process of the bank. Now, I will discuss about some aspects, particularly from the examination point of view. In particular, the professional knowledge paper on credit aspects or credit management or credit prospect, credit the process about the credit policy of the bank, etc., etc. In this video, I will discuss about credit institutions, scheduled commercial banks, non-banking financial companies, urban cooperative banks, small finance banks, etc. Also, I will discuss about different types of borrowers, that is individuals, the partnership, the limited liability partnership, the companies, etc. Another aspects I am going to cover is the principles of lending, the 3 C's or 5 C's. Earlier, whenever the borrower approaches the bank, they will find out either 3 C's or 5 C's. If 3 C's and 5 C's are okay, then they will proceed for the processing of the loan application. Now, I will discuss in detail about these 3 aspects. The credit institutions. Credit is not only provided by the commercial banks. Credit is provided by the non-banking financial companies also. Take for example, the IndusInd Bank or other non-banking financial companies are also floated by some banks. They are giving a 2-wheeler loan, 3-wheeler loan, or commercial vehicles, etc. So here it is not only restricted to the commercial banks. As you know, the commercial banks, as per the second schedule of the Reserve Bank of India, those banks which are registered, those are called scheduled commercial banks. In addition to scheduled commercial banks, non-banking financial companies are also providing credit facilities to the needy people in the society or in the country. Not only this one, urban cooperative banks are also. Even today, the urban cooperative, number of urban cooperative banks are there. Almost every state they are having urban cooperative banks. At the same time, small finance banks are also there. So all the people, particularly the entities or organization, they are pumping the credit in the economy. Credit means giving the loan to the needy people, those who require the loan from the bank, the entities are providing. Either it may be for business purpose or the personal purpose also. The personal purpose is so many products are there in the bank, like a housing loan, car loan, education loan, personal loan, mortgage loan, and in the commercial lines also, working capital loan, discounting of the supply bills or the term loan, or in case of a foreign exchange also, the pre-shipment packing rate advance and discounting, that is post-shipment discounting of bills, foreign bills, etc., etc. So all these things, the credit officer should have the knowledge. Why there is a lot of importance for the credit in the economy? The economy, without a credit, there is no economy. Because everybody knows about the three important sectors in the economy. The first sector is a primary sector in India, that is agriculture sector. The secondary sector is the industry sector. The tertiary sector is the service sector. So these three sectors requires the credit from the banks. Without credit, these sectors will not grow. If the banks are unable to provide loans to the agriculture sector, again the agriculturist has to approach to the money lenders. Secondary sector, industry sector, lot of employment opportunities are arise on account of industry sector. For growth of industry sector, their own capital is there, but at the same time, the banks funding is also required. The third sector is the tertiary service sector. In India, if you see the service sector, a lot of employment opportunities are provided by the service sector like IT sector. Not only IT sector, hospitals are service sector, educational institutions are service sector, telecommunications sector is also service sector. So many service sectors are there. For all these three sectors, banks are providing the loans. That's why these three sectors are growing. If the banks are not unable to provide, then the growth in these three sectors will not arise. Increase in the foreign exchange reserves of the country. Once the three sectors are growing, some of the exports are also there. Agriculture exports are there, industrial goods exports are there, service sector like IT exports are also there. We are providing software services to the other countries also. Once banks are providing credit to these sectors, definitely the sectors will provide some foreign exchange reserves to the country also. Thereby, the forex reserves of the country will increase. Not only this one, being a emerging country, in our country, lot of employment opportunities are required. Population growth is there. Once the banks are providing credit, then the growth in industry sector or agriculture sector or service sector, it absorbs more people for employment opportunities. That's why the bank credit in the economy gives a lot of employment opportunity. It reduces the regional imbalances. The regional imbalances in the country is some areas well developed, some areas not developed. And in undeveloped areas, if the banks are providing lending, then those areas will also grow. Thereby, the all areas, all districts, all states in the country will develop. That's why the banks credit play a vital role to reduce the imbalances in the regional growth of the country. In particular, the seven sisters of the country, that is the northeastern states, lot of lending the banks are now giving for improvement, for development, either in agriculture or industries or service sectors. It increases the GDP growth of the economy. Once the sectors are providing the production, or thereby the gross domestic product of the country will increase. Once the gross domestic product of the country increases, then the government will get some taxes by way of a corporate tax or the GST, goods service tax also. So that's why all are directly or indirectly related to the credit of the bank. That's why the credit officers who are going to work in the banks, they should have this knowledge. Whenever they are giving loans, means it is not simply whatever the excess funds are there to the bank, they are not providing, but it always increases the growth of the economy, growth levels of the economy. Once the proper way of credit is providing to the people, economy will grow, people will flourish, bank will also flourish because the bank is getting some income on the loans and advances, that is a credit by way of interest. So that's why the role of the credit is very, very important in the economic growth of the country. If you see the how many players are there in the credit, number of players are there, organized, unorganized also. Unorganized means money lenders, that is not counted for this one, but organized means the banks. The number of financial institutions including banks are providing credit loans and to the needy people of the country. They are the first and foremost the Indian commercial banks, that is called scheduled commercial banks, that is to be registered with the Reserve Bank of India, being a regulator. If you see the public sector banks in India as on date, 12 public sector banks. Earlier, number of public sector banks are more on account of the merging process. The number of public sector banks are trimmed to 12. But India's largest bank, State Bank of India, is also providing lot of credit to the people, to the public, to the industry growth, to the service sector in the economy. Private sector banks also. If you see the private sector, they are also pumping the credit in the economy for the growth of the economy. If you see the private sector, 21 banks are there. At the same time, foreign banks, other country banks are coming to the India, and they are also providing credit to the Indian people. So 44 foreign banks are there. Some other banks, one or two branches are there. Some banks, 10 branches are there. It depends upon the feasibility, or the if the need is there, demand is there, definitely they want to get the permission from the Reserve Bank, and they want to start their business operations in the country. So the commercial banks, public sector banks are 12, private sector banks are 21, and foreign banks 44 are there. In addition to that, in rural areas also, credit that is required for allied activities, for agriculture activities, for rural artisans, for self-help groups. Lot of credit is required. For that also, directly or indirectly, the regional rural banks are also playing a vital role in addition to the commercial banks. So as on data, in the regional rural banks, 43 are there, and some of the regional rural banks, they are operating in one or two or three districts, and they are also located in nook and the corner of the country, that is in villages. They are also pumping the credit. And the local area banks, lamps are there. It is restricted to one district, local area bank, and in that particular district, they are functioning. But this concept, the Reserve Bank of India also given license to the lamps, local area banks. As on date in India, 3 local area banks are there. In addition to that, the new version, that is the new version of banks, that is called small finance banks. This is called a differentiated banks. When compared to the commercial banks, regional rural banks, it is entirely different. So that's why the small finance banks in India, 12 are there as on date. They are also providing the loans to the people for the country's growth, for the country's economic growth. They are also participating. Urban cooperative banks, In each and every state, a number of urban cooperative banks are there. They are also players in the credit. They are also pumping the money in the economy by way of credit. And the non-banking financial companies. Some of the non-banking finance companies like Muthoot Finance, NBFC, they are also providing loans by way of gold loans, etc. Not only this one, others, particularly IndusInd Bank or that different banks, they floated non-banking financial companies for housing loans. Housing loans also LIC Housing Finance. They are pumping the money like an housing finance company. N number of housing finance companies are there in India. They are also pumping the money. Not only that one, but Punjab National Bank Housing Finance, different banks they have floated their subsidiaries. They are also pumping. In addition to that, factoring services, factoring companies are also the Ken factors, PNB factors, SBI global factors. They are also pumping the money by discounting the trade bills. And in addition to that, the development banks are there. The development banks like Nabard, National Bank for Agriculture and Rural Development, Exim Bank, Export to Import Bank of India, NHB, National Housing Bank, and SIDBI, Small Industries Development Bank. These are also play a vital role in the pumping of the credit in the economy. Pumping of the credit economy. Because of these development banks, in turn, they are giving refinance to the banks also. Refinance facility. Once the banks are funding is a shortage, then they will go for, approach for the development banks. Even as on date, RRBs, regional rural banks also, they are getting the refinance from the Nabard only. Even MSME loans are there, small loans. The banks can get the refinance from SIDBI, Small Industries Development Bank. Like that, housing loans, they can get refinance from the National Housing Bank. And if at all any export finance is there, the banks can get refinance from the Export Import Bank of India. So indirectly, these are also contributed a lot. But as SIDBI, Small Industries Development, they have opened their branches. They are directly providing loans to the needy people also, not enrouted through the bank. And only one bank in India, that differentiated bank, even though it is a bank that is called a payment bank, they are only mobilizing deposits but not lending. If at all any question given in the examination, so the following banks providing credit except one bank means the payment bank. The payment banks are mobilizing deposit, but they are not giving any loans to the public. Only mobilization of deposit. Paytm Payment Bank is there. India Post Payment Bank is there. Like that, the six payment banks are also there. They are mobilizing the small savings from the public and they are investing in government securities, not with the lending or they don't enter into the lending activity. So these are the banks that are playing a vital role in pumping the credit. Credit means the loans and advance to the public. The differentiated banks are two types. One is a payment bank, second one is a small finance bank. There are two types. One is a payment bank, second one is small finance. Based on the recommendations of Dr. Niket Moore committee recommendations. The Niket Moore committee recommendations in other countries also, the payment banks are there, small finance banks are there. But the small finance banks, they don't give the full, they don't give the large scale, only the up to 20 lakhs, they will give the loans. And RBI granted license for the commencement of the banking business under the Banking Regulation Act and registered with the private company under Companies Act. But banks are not registered under Companies Act. So here the payment banks, the have to get the license under the Banking Regulation Act from the Reserve Bank of India, and they have to register as a private company under the Companies Act. That's why this is called differentiated banks. The differentiated banks, the loan size is very less. They can operate across the country. Across the country. So that's why the payment banks are also playing a vital role in pumping or providing the loan or credit to the needy people in the economy. Take for example, small finance banks are there, and payment banks is the type of differentiated banks. Why it is a differentiated banks? Why? Because first of all, they have to register both under Companies Act as well as Banking Regulation Act. Second one is a payment bank. They can mobilize up to 2 lakhs. But DSCGC cover is also 5 lakhs are there. But they restricted only 2 lakhs. But small finance banks, even though they are operating in villages and other things, their quantum of loan is very less. But to cater the need of the small people in the country, those who require loans from the banks, that's why the small finance banks. These two are called the differentiated banks. And Nikit More committee recommendations. Which of the following statement is wrong about the small finance bank? It can be a business correspondence of other bank. Large public sector bank entities and an industrial business cannot open small finance bank. That is correct. Small finance banks are encouraged to lend self-help groups. That is correct. Small finance bank will also covered by the banking ombudsman scheme. That is also correct. But one not correct means they should not act as a business correspondents. Even unbanked areas also, banks are providing the banking facilities through the BCs, that is called business correspondents. In unbanked area, whether it is a rural area or urban area or a semi-urban area or even city or metro, wherever the banks are not there, then banks are outsourcing the banking operations through business correspondents. Any graduate who is undergoing a training with the Indian Institute of Banking and Finance, and if he is interested to start the banking business under the one public sector bank or whatever the bank is there, and the bank will give the connectivity printer and other things, and through biometric whatever the receipts, whatever the payments he will do, he will open the savings bank account, and then that process will be handled by the parent bank. Not only this one, receipts up to 10,000, payments up to 10,000, mini RTGS, NEFT facility, all are there. But in unbanked areas, the banks are unable to open because on account of economic viability. Profit may not be there. Profit may not be there. So that's why in those places, BCs are there. But the small finance banks should not act as a BC for another bank. That is also one condition. Small finance banks are licensed with under which act? Banking Regulation Act, Section 22. Section 22 of the Banking Regulation Act. Small finance banks are licensed. They are licensed. At the same time, small finance banks are to be registered with the Companies Act 2013 and with the ROC, Register of Companies, as a public limited company, because they are mobilizing the deposit from the public. That's why they have to do this one. So that's why the small finance banks are registered under which act means the Companies Act. At the same time, small finance banks are getting license from the Reserve Bank of India under Banking Regulation Act Section 22. Next, although the deposit insurance raised it to 5 lakhs, the DICJC earlier, if the bank is failed, then The depositors will get a maximum amount of 5 lakhs from the Deposit Insurance and Credit Guarantee Corporation. And recently that was increased. The earlier it is low, now it is increased. Now it is 5 lakhs. But at the same time, on account of increase, earlier the payment banks are not exceeding 1 lakh only, they have to mobilize the deposit. Now, on account of rising 5 lakhs, payment banks also now they are getting 2 lakhs the DSCGC claim also. That is with effect from April 8th, 2021. 2021. So the payment banks are also not giving any credit to anybody. Whatever the small savings they are mobilizing, they are depositing in government securities and commercial banks only. And the present limit of the payment bank is 2 lakhs. The DSCGC limit is 5 lakhs. What is the minimum SLR requirement of payment bank? Normally, the commercial banks, out of their total deposits, 18% they have to provide SLR. They have to purchase the government securities. But whereas payment banks, they have to purchase government securities to the tune of 75%. They have to purchase it to the tune of 75%. So that's why the SLR requirement of the payment banks are 75, whereas scheduled commercial banks SLR is 18%.